Hey, welcome to the Guaranteed Retirement Guys show. So today I want to talk to you a little bit about the difference between annuities and certificates of deposit, or CDs. So I'm holding here a copy of my best-selling book, Guaranteed Retirement. And Guaranteed Retirement talks a lot about guarantees, and annuities are a big part of that. So I saved a page here, and it's page 92. If you want a copy of this, let me know. But in here, I'm talking about an annuity or a certificate of deposit, okay? And I go in here and I talk about annuities. I say, hey, look, annuities, they provide a lot of guarantee, and so do CDs, right? Annuities are also protected. If the insurance company goes under, then they're protected by the State Guarantee Association. For CDs, they're protected by the FDIC. So it really just depends on kind of what you're looking for. CDs typically will have a lower rate of return versus an annuity, but not always. But usually annuities that I'm looking at are always paying more. And here's another thing: they're usually always protected from creditors or liens, whereas CDs, they're not. So if you're looking for more protection, then annuities are definitely the way to go. Another thing I talk about in here is on page 93. I talk about joint survivor clauses to provide for your spouse after your death. You have that in annuities. You don't have that in CDs. Another one is the option to leave some of the principal to heirs other than your spouse without probate costs. You can do that with an annuity, not so much with a CD. Okay. Catastrophic withdrawals, the ability to draw a large sum of money for emergency expenses, things like that, like long-term care, terminal illness. You can do that, where with CDs, you can't do that either. So, and then of course you got guaranteed income. CDs don't provide that. So there's so much in here that I definitely favor annuities. I love annuities. And CDs have their place as well. Think of it as this way. CD is more of a very, very short-term investment, maybe just some place to put your money for maybe a year or two, but not much more than that. If you're looking for something that an annuity can give you, income and high rates of withdrawal, no matter how long you live. You might see CDs that are right now, they're paying like 4%, which is huge. And that's great for now. But the problem is they change, and bonds, they change as well. Sometimes bonds yields are high and sometimes they're low. So you don't want to put your money into something that fluctuates, especially when you need guarantees. And so when you're looking at guarantees and you want that guaranteed income, a lot of these annuities, they're paying out like 6 or 7% in withdrawal rates, guaranteed for the rest of your life. Think about that. If you got $1 million, you might be pulling out $70,000 or $80,000 a year, guaranteed for the rest of your life. And let's say you live 30 years. You do the math, you're taking out over $2 million. Okay. That is a lot more than you're going to get from some of these other accounts. So if you're looking for guarantees and maybe you're married and you want to make sure your spouse has that as well, you can purchase one of these annuities. And now you know that guaranteed rate of withdrawal is going to exceed CDs or bonds, and it's going to be guaranteed for the rest of your life. And if you're married, for the rest of your spouse's life. So anyways, just a lot of things to consider when you're looking at your long-term goals versus short-term goals. A lot of people will stick their money in these high yield savings accounts thinking that it's fully liquid, but it's not. They have their own rules and their own restrictions as far as being able to take them out. And so do CDs, and so do annuities. So they all have their restrictions. And so what you need to be thinking about is, what is your long-term goal? Okay. If your long-term goal is to get as much income as you can possibly get, and you want it to be guaranteed, and you want to make sure that you cannot outlive it or your spouse can't outlive it, then I would highly suggest considering a fixed index annuity with guaranteed income as a solution, because you can't get much better than that when you're looking for guarantees. You can look at municipal bonds, you can look at corporate bonds, you can look at CDs, treasury bills. There's so much that you can do, but they fluctuate. And it's something that you have to continually manage. And if you're managing it and your spouse doesn't manage it, what's going to happen if you pass away 10, 15, 20 years from now, and you've been managing this and you're really good at it and everything's been going great, but now all of a sudden they have to manage it. At that point, it might have been better for them to have some guarantees they can get from a guaranteed income annuity, perhaps. So there's so much that you can do with these, and you really don't know unless you take some time to actually look at it with a professional like myself And I'd love to chat with you. I'd love to answer your questions. Go ahead and schedule a call. You'll notice that there is a link at the bottom of this video. If you're thinking about purchasing an annuity for yourself, for your family, and you want some guarantees in your life, I'd be happy to show you the best ones out there. So anyways, hope you are enjoying this video, and please let me know if I can answer any other questions. All right, we'll see you soon.